Boom. We are live, ladies and gentlemen. Thank you for joining us on today's episode. I'm trying to do the live stream again here, so hoping everything goes smoothly. We're going to be taking a look at Bitcoin, Solana, and some of our other favorite assets, the general market as a whole. So keep that in mind. We're going to try to spend more time with you guys today, just because I guess that's part of the fun of being able to go live. Now, I'm not sure why, but for some reason the connection here while I'm in Dubai is just horrible. It looks super fast, but then when I actually connect to YouTube and try to stream, it's pretty bad. So bear with me. Let me know in the comments if it's worth doing the live streams or not, because I can't really tell. You guys are on the better end of receiving the data than I am. So we're just gonna dive right in, and we're gonna take a look at where we were from when we left off on Friday, effectively. So that brings us straight to Bitcoin. There we go. We've been following this nice horizontal trading range for quite some time. We've bounced right off the bottom of the range. Again, I mentioned that I may have made a mistake with the spring being here, and it may have been here. Just serious movement right off the bottom of the trading range, though. Again, very bullish. I had mentioned right at the beginning of this, if you go back and watch my videos, that we should expect a large amount of volatility to come into the market, to be defensive with profits with your, especially with the altcoin portfolio. But with Bitcoin here, I said it was very likely that we were going to move into a reaccumulation range of some kind because of the larger story that it took to get us here. Now, one of the things I wanted to point out is, number one, remember, we're in multiple hundreds of days of accumulation to get to this point, which is important to remember, because it usually means we have equal amount of time into the bull market itself. So we're about halfway through that, about halfway through the bull market, again, which would lead me to believe that what we're witnessing is actually the kind of backup phase at the top of an accumulation range. So if we look at this again, remembering the scale invariant nature of everything that we go over, we've already had a really nice accumulation range between the $16,000 and $25,000 area. And then a break above that accumulation range turned into a backup phase. Now, if we zoom in on this specifically and point out what this looks like, this is your spring, your SOS, and your backup phase formed this nice horizontal trading range right at the top of the breakout. Now, this is what I suspect we're doing here as well, which is we are forming a reaccumulation range right at the top of the breakout, and we're testing. Now, we could even see wicks down as low as 52,000, although, because again, the scale invariant nature of an accumulation range, especially when you're in reaccumulation, is much more difficult to manage than where we were when we were at the bottom of the range. This area here was a heck of a lot easier, just go long everything, was the general sentiment that I tried to share with everyone on the YouTube channel. That was clearly the right idea. But up here, it's not as easy to just go, let's go long everything. And I guess conviction is much higher when we're at the bottom than when we are up lower, up as high as we are right now. And one of the reasons why I think this is important is because I remember when I was talking about being defensive with profits in this area, where there were many comments about how the bull market wasn't over, it was just getting started. And although I agree the bull market is not over, that we're going to see a final push probably into the $125,000 area for Bitcoin, it's important to remember that the market makers and market operators are intently driving the market price up so that they can take profits and sell into all the hype of the price. So one of the best marketing tools of an asset is the price going up. And most of the time what happens is retail gets sucked in because the price just starts to go up and up and up, and it looks like, wow, I could just be making money every day. So that's what people start doing. They start going, wow, I could just put money in the market every day. It's all going up. I'm fucking genius. And then they get caught in the whales taking profits. Now, again, I do believe that there is another leg up to this market cycle so that it is not over. I've said that continuously, although the alternative assets got hit significantly harder than I had suspected. Avalanche and some of the others we'll look at in a second here got tossed down from the $120, or the $60 to $80 they were at, all the way back down to 30. So it's like, it's 100% to the downside if you measure it to the upside. So fairly significant. I'm going to start by taking a look here again. Actually, let's take a look at the oscillators. Number one, I'd like to point out we are above the 200 simple day moving average, which is always a very important area. We are maxed out on the daily for the stochastic RSI, and the RSI is just about to break over the 70 point. Now, when the RSI starts to break above 70 here, things become very volatile. This is usually when price structure breaks up and you see significant gains in a very short period of time. This is measured over here by this kind of green highlighted area of the market cycle itself. So we can look back and say, oh yes, look, we're super overheated, and when we get into the green is actually when we see the most growth. I suspect that that's going to come next, but not without a little bit of consolidation. So for Bitcoin on the 6 hour here, we can see that the stochastic RSI is turning down to the downside. Like I said just a few days ago, it's when the stochastic RSI resets within these ranges here that we should be excited about points of entry potentially. And Bitcoin's stochastic RSI is about to reset, and both are moving to the downside too. So I suspect some consolidation and some downside to this test here in the next little while. And that's kind of clear throughout all the assets. So the other thing that was kind of important is that the hash ribbons has been in capitulation for quite some time, which is also driven by fear in the markets through whether that's the selling of Bitcoin by Mt. Gox or the German government. This is basically large capitulation, but it's been all absorbed fairly well right off the bottom of that trading range as well. So important to note these things. That much of that absorption took place pretty easily, and it didn't send us any lower than the bottom of the trading range, which is perfect. Now, again, for Bitcoin stochastic RSI to reset, I would like to see a test at the bottom of the EMA bands, which is now currently around 62,000, and the simple moving averages on the 6 hour around 64. So probably in the short future here, we see a retest of both 64 and 63, and we probably build a small trading range here. This is usually my favorite spot. Is if you can find a reaccumulation range inside of the middle of the box before moving up. So on to fetch. On the 6 hour and the 4 hour, it appears to me that we are creating a trading range that is basically right between the middle of the bands as well. So we're currently below the 200 simple moving average and stuck between the EMA bands. I suspect that there's a pretty easy jump for fetch here for another 30%. Avalanche, on the other hand, again, 6 hour stochastic RSI pointing to the downside, so I do suspect we see some consolidation. Just the other day, on the 15th and 16th, I said, look, we're at the top of this trading range. We could see a breakout, and we actually saw a total breakout. So this is now an SOS with outside of the smaller accumulation box. So we did see this previously though, and it can be upthrust and distribution. So we're going to want to keep a really close eye on the markets before getting super excited. But this time I suspect we see a change. If we start to break back down below the trading range here for Avalanche, it's not a great sign. But for me at the moment, we see significant demand in the supply signature down at the bottom, whereas previously the move outside of the box had no significant demand. So it's really important to keep that in mind, that right now the big difference here is the breakout of the box is actually driven by a demand signature that's equal to the previous selling pressure into the downside of that trading range. So I think that looks like a bullish change of character, and it would kind of match what I was talking about earlier, where we see accumulation, reaccumulation turns into distribution then turns into redistribution, which turns into a style of reaccumulation. Again, on the larger time frame, it's kind of a little bit easier to see. I'll jump out to the daily here for Avalanche, and it was pretty clear on fetch too. So I actually go with fetch to show this larger time frame story. as I already have it written out. So here with Fetch, if you've been following along, we were hyper bullish at 33 cents here, noting again this particular pattern, which is accumulation followed by reaccumulation, then distribution, followed by accumulation. So we see accumulation, reaccumulation, a massive markup within the cycle, which moved into distribution, redistribution, and then what I would assume now is probably the last bout of accumulation before we go into the finality of the bull market. So I think we have another maybe 200 days of kind of breakout market cycle, and we are currently beautifully stuck between the 200 and 314 day simple moving averages, which now appear to effectively be its trading range. So we have multiple alignments. With anything here, you're trying to look for as much connection and relation to this as possible. What ends up happening is when you are with any kind of data stream, especially with like the markets, you can actually do everything right and still be wrong. It's one of the things I like least about trading. In most other business practices, when you're right and you're doing something right, it just works. Trading, on the other hand, is you can do it all right, be right, and still get it wrong, which is a pretty impressive thing. This is usually why we try to focus on the larger time frames and the bigger moves. I don't like day trading. Some people are good at it. I much prefer to follow the larger trend cycles and then go from there. Again, it's still easy. You can still make mistakes and get it wrong. So you can execute perfectly and basically still get it wrong, which doesn't, in the normal business world, again, that just doesn't happen too often. So what do I want to do? Yeah, I want to go back here to Fetch. I believe we're probably in accumulation here for Fetch, and that we're going to see another quick up cycle of around 20 to 30% to the top of this trading range. So there is momentum and value here. If I go out to the 6 hour for SI, just to look at the general markets, it appears to me that this was also a subtle accumulation in the parallel channel, and we've now broken out above that, so that we've seen our distribution, redistribution, and then into a smaller form of reaccumulation. We're also breaking and starting to break above and hold above the 200 and 314 simple moving averages. So I would like to see a total reset of the RSI here to flush out some of the volatility in the market. Solana was one of the strong movers here again the other day too. In our previous videos back when we were down around 140, I said, look, we're probably going to move to the top of the box with ease. And we're almost damn near the top of the box. But again, important to note that both the stochastic RSI and the RSI are in oversold or overbought territory, so it's likely we want to see a reset of that, but it could push us all the way to the top of the range. Now, for Bitcoin, the dramatic thing that could take place here would be a shift. So even if we go and break above the top of the range, I'm going to suggest using stop losses, which back in October of 2023, when we were down near the bottom, I said no stop losses. Those were just effectively more areas to add to the position. Whereas here, when we're so high up, it's just easier to add some type of defensive profit-taking mechanism to your portfolio because the risk of downside is effectively equal to that of the upside. And that's always a dangerous place to be, is when the RR is basically 1-to-1. It makes more sense, in my opinion, to be defensive there because there's just so much more room for downside effectively. We're in October 2023. I'm like, go long everything, ladies and gentlemen. We don't have that mentality right now. So again, note the change of my character as well within this particular sentiment, because we could do something like this, move to the top of the box, find out that this is a distributional cycle before moving into some type of breakdown to 30,000, finding another reaccumulation range before going to $120,000. So the market really is always trying to get rid of leverage and weak hands within the system. And we have looked at multiple times that there is a massive amount of liquidation taking place at two spots. Number one is up near the $72,000 area for a bunch of shorts that have taken place, highlighted by this green bar here, somewhere in the like $20 to $30 billion of shorts. And then again, there's another massive area of long liquidations down near the $34,000 area. So big market makers and big market players are often trying to get rid of that by driving the price down so they can get all that Bitcoin that's basically bought up by loans. So the market is often trying to get rid of loans. Basically, that's one way to look at it, is someone's taken out a loan to buy Bitcoin and still currently paying for those loans at this moment. So although I have noticed that those are decreasing, the amount of leverage has decreased as people start to close out those positions and just take profits, which is also due to some of the downside as well. So it's not just the selling of the market into the market like the German government. It also has to do with the selling onto the market by those who are taking profits from their longs. So that's one important thing to note. I also wanted to highlight that we are back into greed very, very easily. We've jumped into greed here, up at 60, 74. Again, you can, this is a great way to look at market sentiment. If you want to, if you can basically buy Bitcoin anytime the greed index is down below 30 and sell anytime it's up above 60. So it doesn't work always, but the reason why this is important to note is because the market is driven by human sentiment. A lot of people think it's by bots, but it's not true. All of the algorithms are driven by human emotion. There are very few people that have figured out how to walk outside of that. It is probably possible, but it's seldomly done. I think Jim Simmons and his fund are probably one of the only ones. But again, if you're looking for the easiest modality here, just Bitcoin is a great asset. If you're not into trading and getting in and out of the markets at particular times, the best thing anyone can do is start to invest like it's a phone bill. Just spend money every month based off what you can out of your revenue to invest in Bitcoin. Everything else is highly speculative, and I would consider venture, which means there's asymmetry to the bet, which means you could make 100x or get rugged and go all the way to zero. So there's a lot of volatility in that. But I think you can safely invest in Bitcoin now. And I've said this since about 2020, that Bitcoin went public in 2020, and it's likely to stay that way. It's likely some type of safe haven asset just because there's so much value there. There is things that could break it. We've seen breaks in Bitcoin in its past. I don't think it's going to happen just because there's something called the Lindy effect, although it's more of a personality type basis. It says the longer something exists, the likely it's going to exist even longer. So technology is one of these ideas that the more we have chairs that have 4 legs, like a chair hasn't evolved that much over the thousands of years that chairs have been around. They're largely the same. They're largely going to continue to be the same. Unless there's some breakthrough in technology, chairs will remain the same probably for many lifetimes to come. So there are ways to look at the way technology evolves and adapts over time. And Bitcoin's really put in the work here of being here for long enough to assume that it's going to be here for longer too. So, whereas we can't really say that about Ethereum or some of the other assets. So I wanted to also really quickly look at the S&P 500. We are totally reset on the daily stochastic RSI, which is a great sign. We could move down a little bit further because the RSI itself is not reset, neither has the MACD. But inevitably, again, we're pretty damn close to the top of that range. I was looking forward around 571 before we form a larger reaccumulation range here, probably something like this. So we're probably in the start of that now. I think that accumulation range will probably drive more people into Bitcoin too, and that we're going to see that move, again, at the very least is going to take us to $72,000 to wipe out all of that leverage that's in the ecosystem, because you've got $20 to $30 billion of leveraged liquidations taking place at around 72,000. And that's going to happen very, 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 very quickly, I think. So something to keep in mind. The other thing I want to look at too is silver. I've mentioned this a few times that although I'm not a big fan of silver per se, I think that the fact that we're seeing a multi-year reaccumulation pattern now break into its SOS and backup phase is a strong indicator that we can rely on the bull market continuing for longer, because this is a very slow moving asset. You're talking about from 2020 to 2024 in accumulation. And it's not just in silver, it's also in gold as well, where we are at the top of the trading range. and into what appears to be an SOS and backup phase. So on gold, it's even longer. We actually have to roll out here. Let's take a look. There we go. So this is gold on the weekly. As you can see, it looks like a beautiful multi-year cup and handle into its SOS phase, the handle being the backup, and now we're breaking out into the first kind of LPS before we go higher. I can see gold easily going to $3,200 here, and in the same time, Bitcoin will probably do up to 125,000. So this multi-year accumulation channel, beautiful cup and handle for gold here, leads me to believe that many of these kind of safe haven assets are going to be at the top of the list. I think more and more people are recognizing the inherent mistakes that governments make, continue to make, and then throughout history have always made. They start to print capital, they give that free money away, like, oh, we're just going to wipe away trillions of dollars of debt. That's called inflation. It has a massive negative effect on the market, especially if people have had to pay for something that they then get for free. It's not a good look, and it usually has negative consequences, but just not today. It's like you can take heroin today, and it won't have a super negative consequence today, but it will eventually. Like, you wait. It's going to get worse. So that's generally how people look at the market. But this looks like a beautiful cup and handle to me. So I suspect further upside for gold, which will then also lead into the same storyline here, which is they're going to print dollars. They're going to continue to print dollars to try to give them away for free to pay for school or whatever the fuck the governments think is a good idea. It's always a bad idea. Governments should be reducing taxes and reducing their spend because they are not a fucking corporation. They are a government. They don't make any money. And if they just print money, you're going to have to pay it back, and your kids are going to have to pay it back, and your kids' kids are going to have to pay it back, which effectively ends up being no one's paying it back. You're just getting by the market and inflation. So just a quick little update. I guess I'm going to scroll over and take a look at some of your guys' thoughts and questions on the live chat here. Let's take a look. Did Avalanche jump the creek again? Creek jumping is really mostly for longer term accumulation. Even in the reaccumulations, it's not the thing I technically look at. Some people do draw it in. The creek is less prevalent, and it's usually the point of control for that trading range, which for Avalanche, Fetch, and a few others we are currently at and or have already jumped over. Same with Solana. We've jumped across the creek by jumping across the middle point of control. Someone says, Sol's already melting my face. Great. I'm glad to see that. Do we have a melting faces this market year? So yeah, someone already said it's melting your face. I guess it really depends on what you think that is. If you're looking for 100x, Fetch since January of 2023 is up 50x already. And Fetch has been one of the ones we've talked about for years now. It's up even higher if you go back to our 2018 videos when I've talked about the importance of AI in this sector. Clearly, I was right there, more right than I guess some of the video game stuff, but it's win some, lose some. Yeah, using no leverage is better than low leverage. You can still get liquidated. So don't forget that. You can end up losing your position in leverage, and most people don't enjoy that. It's better just to make clean and clear investments over and over, unless you're really good, have the capital, and know what you're doing. Although I guess those first and last two are basically the same thing. Yeah, don't forget to hit that like button and also subscribe. It really be helpful. Try to get the YouTube algorithm to feed my videos to more and more people again. So if you can, share them far and wide, and remember to check to see if for some reason YouTube unsubscribed you. Awesome. I'm gonna leave it at that. I can feel my voice is getting tired, and I don't like to do too many videos that are too long just because I have other things to go about my day. And it looks like the stream is breaking down here too. I see 0 kilobits. It's so crazy. I have super fast internet here, and it's just crap to uploading to YouTube for some reason. So I don't want to stay online too long for that. The altcoin season, yeah, really, I think you're going to see a lot of the altcoins die this year. I think a lot of people are going to recognize that there's just no intrinsic value. It's really hard to drive demand. There are ways to do it through products, and that's why we thought video games, and also why potentially AI and data for AI is going to be so valuable, or compute. Networks like Akash that we had looked at in some of our podcasts could be very valuable through that driving relationship of the necessity for data for AI. But other than that, most of it's just vaporware effectively and going to zero. So invest assuming that it's going to go to zero, and if you get 100x from it, you're rocking, right? This is heads I win, tails I only lose a little mantra. If you're over invested in an asymmetric bet, just know that the likelihood of going to zero is higher. So I wouldn't try to overinvest in something based off that mentality. Unless you see growth consistently, and then I would just take time. You don't have to get all in a position today. You can give yourself 5 to 10 years to figure out, is this a good idea? I think that's a much better route to go. Let's say you want to invest $100,000 into something. It's much easier to just do it a little bit at a time, knowing that it's asymmetric in its nature. And that if you're right 3 years from now, you'll still get more opportunities to make that investment. Whereas if you're wrong 3 years from now, you invest it all at once, then you're basically fucked. So I'm going to leave it at that. Thank you guys all for joining us today, both on Rumble, YouTube, and Twitter, I guess, too. We were live on Twitter. Give us a thumbs up, subscribe, all that fun stuff. I will be back again tomorrow. Probably not a live update, just because I'm just getting, it seems like bad data connection here, and I don't know how to fight it. So thank you all for joining us today, and we'll see you guys again on the next episode.